Welcome to today's deep dive. So, what if I told you that the most flawless, successful company on the planet might actually be the most dangerous place to put your money right now?
Yeah, I mean, it sounds completely backward,
Yeah.
right? It really is the ultimate market paradox.
Exactly. Today, we are unpacking this really fascinating stack of financial analyses and insider notes, and they all make this highly counterintuitive argument that NVIDIA's absolute perfection is exactly what makes its stock a massive trap.
Well, you see a business executing flawlessly, just dominating its sector, and your natural instinct is to want a piece of it. But these sources argue that, perfection is already priced in. There is literally zero room for reality.
Right, and to understand the sheer scale of the risk, we first have to look at the scale of their recent wins. I mean, the sources highlight the reveal of their new Vera Rubin architecture.
Which, for anyone not deep in the tech specs, is basically their next generation AI chip design.
Yeah, and the computing performance has literally doubled compared to their last generation. Plus, their orders are already backlogged deep into next year. So my question is, if a student consistently scores a 120 on a 100-point test, isn't that just a guaranteed win?
You'd think so, but the issue isn't the test score. It's the expectation for next semester. And this brings us to a financial trap known as valuation regression.
Okay, valuation regression. Walk me through that.
Sure. Look at NVIDIA's market cap. It's sitting around $4.4 trillion right now.
Which is just an unfathomable amount of money.
Right. And to financially justify that specific number, the market essentially requires NVIDIA to maintain over a 50% compound annual growth rate for the next 5 years.
But wait, didn't skeptics say Apple's valuation was mathematically impossible like 10 years ago? I mean, they blew right past those limits. Why is NVIDIA any different?
Well, it really comes down to the sheer physics of the numbers. Maintaining a 50% growth rate on a $4.4 trillion base isn't just hard. At a certain point, NVIDIA would need to consume a noticeable percentage of the entire global GDP just to keep growing.
Wow, so the ceiling is just fundamentally lower because the base is so huge.
Exactly. The market's baseline expectation for this company is no longer just growth. The baseline is miracles. And when miracles are the baseline, merely being excellent is treated as a devastating failure.
That makes so much sense. And if NVIDIA actually needs to hit those impossible growth targets to keep its stock afloat, we have to look at whose pockets that money is coming from. Which brings us to their mega clients like Microsoft, Meta, and Google.
Yeah, these tech giants are currently draining their capital expenditures, their CapEx budgets, just to hoard these chips.
But the financial analyses we're looking at suggest they aren't doing this out of, like, some calculated optimism, right?
Not at all. They are buying out of pure survival anxiety. They're absolutely terrified of being left behind in the AI arms race.
Wait, so you're telling me NVIDIA's current boom is built mostly on their clients' anxiety, not a sustainable closed loop of actual AI profit?
That is the fatal flaw in the system. The CFOs at these client companies are quietly crunching the numbers and realizing the return on investment just is not materializing.
Right, because they're spending billions on chips and data centers, plus the enormous electricity cost to run them.
Exactly. But on the revenue side, they simply aren't selling enough $20 a month AI subscriptions to consumers to cover those colossal infrastructure costs.
Oh man, it sounds exactly like the toilet paper panic of 2020. Like everyone panic bought because they thought supplies would run out forever, which created this mirage of infinite demand.
That is a perfect analogy, because if these cloud giants suddenly realize their AI business models aren't turning a profit, they will cut their CapEx budgets overnight.
And NVIDIA's legendary supply shortage instantly morphs into an inventory glut.
Precisely. Which brings us to the ultimate takeaway for you listening to this.
Hmm.
There is a massive difference between a good company and a good stock.
Because greatness creates consensus.
Yeah, everyone agrees NVIDIA is a spectacular company, which means the stock price reflects absolute perfection. But the smartest investors know that the best profits hide in market divergence, in differing opinions.
Right. Buying into universal consensus means you are paying top dollar for zero margin of error. But hey, we should definitely remind everyone what we are doing here is just a deep dive into business logic. We are breaking down the arguments in these sources.
Exactly. This is absolutely not investment advice.
Mm.
The market has risks, so always do your own independent research before making any financial decisions.
For sure. The market is entirely unforgiving of blind faith. So NVIDIA has already won the world. They built the infrastructure of the future. But remember, your buy-in price determines your fate. Will you rush in at the absolute peak or wait for the fog to clear?
It's a tough call.
It really is. And here is something else to chew on. As AI models become exponentially smarter, they also become more efficient. What happens when the AI gets so good at coding that it learns how to run flawlessly on cheaper, older hardware? The ultimate irony might be AI advancing so fast that it destroys the need for NVIDIA's premium chips altogether. Think about that until next time.